Hey everybody, today is February 19, 2025, and today we're going to talk about the price of Bitcoin, where I see the price of Bitcoin going to for the month of March. Before we begin, please read the disclaimer. You can pause the video as you read it. Alright, so where we left off last time was roughly around here in late February. And my prediction from, late January, my prediction for February was that I thought we were going to just consolidate and move sideways, absorb sell pressure, and push up higher. Now, this month was a lot weaker than I expected. I thought we were going to be closer to Fibonacci, which is around 100,000, and actually stay above it for a while and then push up higher, right? But we ended up going below. And not only did we go below, we actually we're now staying below our short-term moving averages, right? 50-day moving average and also the 100-day moving average, which is gold line. So the fact that we're below is a little bit more bearish, but we still are holding the 90K major support level, which I said was important over the last 2 months. So the reason why it's important is because we made this impulse move higher, right? Last year we consolidated for 8 months, right? And this formed a really strong and important support level. And I said that in my last video that it's important to hold 90,000 because if we don't hold 90,000, we're likely going to plunge down to this. Well, technically we're going to plunge down to the 200-day first, right? And if we don't hold the 200-day, right, we might see something like this. Best case scenario, if we do come down this far, is just to consolidate around the 200-day moving average and then move up higher, right? Something like this. However, if we come down to 200-day and we don't hold this level, we're going to plunge down to this range, where we were for 8 months for last year, and that's bearish, right? Because remember, the reason why we consolidated for so long last year was because this was the resistance level that we had in the previous cycle top, right? Around 70,000. So the reason why we consolidated so long was because this was massive resistance level, right? A double top is strong resistance. And then we finally broke out of it and we pushed up higher. It was the next impulse move higher. So if we end up coming down again, that's actually very bearish. So we don't want to come down. We want the price of Bitcoin to stay above at least 90,000. That's right. That's the minimum support level, right? If we don't, we're going to come down to the 200-day around 80,000. And the probability of going down is a lot higher, right, than it is up here if we stay above. So this is why I said it's important to hold this level, this Fibonacci level, right, of 100,000. But there's a lot of sell pressure right now on the exchanges. So for now, we want to at least hold 90,000. That's the bare minimum. We want to retake these moving averages. See, they're getting closer to crossing, right? If the 50-day crosses below the 100-day, that's generally a bearish sign that the momentum is starting to shift downwards, right? Volume is dropping. RSI is going down. So what we want to do, what we want to see for March, and what I think can and will likely happen is that I do think we're going to defend 90,000, right? And then we want to come up, retake these moving averages, and then retake up the resistance level, right? Retest this resistance level and turn it into support and push up higher. So because February is a lot weaker than I expected, I do think March will continue to be another sideways month. And we're going to take our time to reclaim the short-term moving averages, and then eventually the Fibonacci resistance level at 100,000, chop sideways and push up higher. So if you've been following me on X, or formerly Twitter, I've been saying a lot in my posts that I don't think we're going to make the next move higher until Q2, quarter 2 of this year, right? And this is part of the reason why we've seen a lot of weakness, a lot of sell pressure on exchanges. So I do think Q1 is going to be a sideways quarters, right? And then we'll probably see the next impulse move higher to 150,000, which is, of course, the next Fibonacci resistance level, right? Let me see. Right. Technically, it's 155,000, but 150,000, that's a strong psychological number. And if you look at the last time we actually hit some resistance right below the red line, right, in the red zone, and we pushed up, we corrected downwards. So that's around 150,000, right, over here, close to 150,000. So I do think the next impulse move higher in Q2 will likely take us to somewhere to 150,000 before we consolidate again, right? And I've been saying that I do think that this cycle might seem more like get a cleaner chart. It seems like we might be following the 2017 cycle, where we start out the year kind of rocky, but then we get more and more parabolic, and we kind of have a blow off top, right? Whereas last time we topped early and then we had a double top before going down. I think this time will seem more like 2017. In fact, just the price action from the bear market low, right, seems a lot more like this time, right? More and more parabolic. Whereas last time we kind of like sprinted consolidate it, and again sprint it and then consolidate it, right? So this time I think we might actually go higher on a percentage basis from the bottom, but yeah, we'll see. So that's my short-term prediction based on the technicals. We still, right below 50 for the RSI, so there's still room to go up, but we definitely want to, in a bull market, you definitely want to stay above 50, right? Some macro data, so inflation, CPI report hasn't been looking good for a while. We basically just reported another month of increasing inflation, CPI data, up 4 months in a row now, right? And this led the Fed to pause rates again. So this year, the probability of rate cuts has gone down, and this is why the market has been a little bit more pessimistic. In fact, this is why the market went down late last year, right? But with Trump in the presidency right now, hopefully, and he's a pro-business president, hopefully this gives us more. This is enough to overshadow any potential headwinds from rising inflation, right? I don't think the Fed's gonna raise rates. At best, I think they're gonna pause rates, right? Hopefully, we do start to see inflation come down, and this is just a temporary uptick, and that will blaze the way for higher stocks price and also Bitcoin, right? Other potential headwinds that I've been talking about in the previous videos is yield curve uninverting, right? Usually that's followed by a recession, and this is the longest we've been inverted was since the 1980s, right? And you can see we had a pretty long recession here, right, compared to the other recessions that we had over the last 40 years, right? And so usually this is followed by a recession. Doesn't mean it's going to happen now, but I do think that that might happen sometime within either the second half of this year or sometime in 2026, right? Which, if you believe in the 4-year cycle of Bitcoin, that should coincide with the next bear market, right? Similar thing is, if you look at the history, whenever the Fed starts cutting rates after a time of elevated rates, that usually follows a recession, right? Or it's followed by a recession. Sorry. Last time we had that was during COVID, right? And now that doesn't necessarily mean that we're gonna have a recession like imminently, but probably within the next couple of months, right? I think starting in the second half of this year or sometime in 2026, we'll probably have an official recession, right? Even though it feels like we've been in a recession for the last 2 years, right? With 2022, inflation going up, the cost of living has gone up significantly, right? Everything from groceries to rent, all that stuff is being reflected. But ultimately, I do think that Bitcoin will go up higher despite these potential headwinds, which may or may not happen. Again, history doesn't always have to repeat exactly, but it does tend to rhyme. So we might get a recession, or maybe we're sort of going through a silent recession right now. A lot of people believe that, right? But anyways, getting back to the chart. Now let's look at the bigger, like longer term charts, right? So this is the 2-year multiplier. And I like this because it's just a very easy, big picture view of the price, right? Either you buy when it's below green or you sell when it's above this orange-red line, right? Now, of course, we didn't go above this orange-red line last time, which makes me believe that we might have diminishing returns every cycle, which is realistic, viewpoint, right? You can't expect Bitcoin to 10x every time, right, or 20x, especially as now the market cap is just under 2 trillion as of today, right? But it does seem like this is still in a bullish posture, right? Right now we're sort of in the middle of these two bands, right, around 100,000, which is a strong psychological level, which probably explains why we're staying so long at 100,000, right? But if we move up higher, this is showing us that the upper band is at 262,000. Now the last time we just touched it last time, right? We just touched this line, and that was the top. So maybe this time we won't touch it. We'll be somewhere below it. But even if we are below it, at today's price, that would be easily like 200,000, over 200,000, right? Maybe 250,000, which is still a decent chunk of change, right? That's still over double from where it is today. So this is overall a very bullish chart, right? And like I've said, this cycle does seem like it's more like 2017, right? Look how long we stayed below the green line compared to last time, 2017, right? A very similar, like, long time, right? Versus the last cycle we were here, right? In the last cycle in 2019, we didn't stay below the green line as long as we did in 2015 and also 2022, right? So I do think that there's a chance this might go parabolic. It's not guaranteed, but it does seem like the price action is following more like a slow parabolic rise. So if that is to happen, we might actually see this rip up below, above the red orange line, right? And might outperform, or at least perform better than we think. But overall, this is a very bullish chart, right? Price cycle top indicator is my favorite top signal. It calls the top of the price when the dots appear, which is when the orange line crosses the green line, right? Now, this is fairly, if you look at the past, it's fairly accurate, right? Now, the time might not be accurate. Obviously, in November 2021, we actually saw the price go up slightly higher. It wasn't that much higher, but slightly higher than the peak in April 2021, right? But even if you sold at around here, around 65,000, like, sure, you didn't sell at 69,000 or 70,000, but it's still like somewhere near the top. So this is a pretty good indicator of the top. And right now, this is predicting that the top will happen in February 2026. Now, this is assuming that this is going to keep rising in the same pattern, but we do know that Bitcoin tends to go parabolic near the top, right? You can see every time we hit the top. So if this thing does go parabolic, the lines will actually cross sooner, which signals a cross sometime in Q4 of this year, which would align with the 4-year cycle of the tops usually occurring in November or December of the bull year, the final year before the bear market, right? So, and you can see like the price action looks very bullish, right? In a bull market, the price of Bitcoin stays above the orange line. It might come down to retest, which is what we're seeing right now. It's coming down to retest the orange line, right? But in a bull market, we tend to see it come down to touch the orange line a couple of times, but it always recovers and push up higher. And the moment we go parabolic is when the price moves above the green line, right here, over here, over here. And that's when you want to be a little bit more careful, because that's when you want to be on guard on when you have to potentially take profits, right? Because once the green line, once the price of Bitcoin goes above the green line, that's going to pull the orange line above higher, right? And when it crosses the green line, that's our signal to sell, right? Again, not 100% accurate, but fairly accurate. Price forecast tools combines all these indicators, top and bottom signals, to give you more of a bigger picture look, a holistic view of where the price could potentially top and bottom at, right? And you can see it's been fairly accurate over the past couple cycles. And what we're seeing right now is that, and also another thing to say, to view, is that every cycle, it seems like we're touching a lot lower, right? At the lower levels, like you can see how we touched the blue line over the last couple cycles, but the most recent cycle top in 2021, we didn't even touch the purple or the blue line, right? We only hit the red line. So it is possible that we only touch the red line this time, or maybe we don't even get to that level. But even if we do, that's around 200,000, right? And that's just at this level, right? If we do get a cycle top in later this year, these lines will be a lot higher. So that'll give us a higher potential top. So it does seem like this potential top will likely be somewhere around 200,000, give or take, maybe a little below 200,000 or above 200,000. That's just my general prediction based on all these indicators and on the Trump presidency and economy going forward. Of course, we have these potential headwinds, recession risk, which could happen in 2026, which aligns perfectly with the bear market that we usually have, right, following the parabolic bullish runs. But overall, I would say that I'm bullish overall for this year. But again, just to reiterate, I do think that Q1 is going to be a sideways quarter. I don't think we're going to make a move higher until we're able to not only defend these moving averages, defend 90,000 at the bare minimum, but reclaim this Fibonacci resistance level, right? Fibonacci levels are usually strong resistance and support levels, right? You can see here we came up, came down, retested, held its support, and we ripped up higher, right? Right now we're touched it 1 time, 2 times, tagged it twice, and we're being rejected. Now third time going to be the charm? This is our opportunity to see, can the buyers absorb selling pressure supply, right? Chop sideways, push up higher, turn this Fibonacci resistance to support, and then push up higher into Q2, right? And I think that's what's going to happen. I think we're going to spend the rest of this month and also March probably sideways, trying to push up higher. So what we have to do is we need to, at a minimum, defend 90,000, right? Which is what I said. 90,000 is important. We don't want it to come down 200-day moving average. We definitely don't want to come down to this range, which we spent 8 months last year consolidating and defending, right? Second thing is that we want to reclaim these moving averages, right? Right now we're below the 100-day moving average. We want to we want to reclaim the 100-day and the 50-day moving average. The third thing we want to do is we want to we need Bitcoin to flip resistance, Fibonacci resistance to support. This is about 100,000, right? A strong psychological number, right? We already tried twice and we failed. We need to try one more time, and we need to consolidate and push up higher. I think we're going to spend the rest of this month and March doing exactly that. And then I think the first couple months or the first month or two of Q2, we're going to spend that time also defending the Fibonacci level and flipping it to support from resistance, right? And then we'll probably push up higher. And I think sometime in Q2, we're going to make the move towards 150,000, which of course, according to my Fibonacci pattern, is the next major level over here, right? So I think sometime in late spring or summer, we're going to make the move to 150,000, and we'll see how the price action develops going forward to make predictions for the rest of the year. But that's just basically my short-term, intermediate, long-term prediction. Again, I think there's a good chance we can at least double from here to somewhere around 200,000, give or take, right? Maybe a little below 200,000, maybe a little above 200,000. But yeah, for now, we'll just focus on the short term. Everything looks pretty good. And that's just what I'm expecting for the next month. Just some consolidation, building support, defending 100,000. We definitely want to end March above 100,000. And that'll give us more of a positive framework to push up higher. And also keep in mind the rates. We want to see rates come down. And that'll give the Fed more room to cut rates potentially and give us more of a positive catalyst to push up higher. Thank you for watching this video. If you found it helpful, useful, or informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.